Hey there traders, David here of Trading Fibs and MarketFi to bring you today's Spotlight Trend Trades of the Day. My trading mantra of know one thing and know well rings true for all markets. Whether you trade the futures, Forex, ETFs, or any other market, my plan will keep you disciplined. Any and all financial advice given in this video is for educational purposes only. Please seek a qualified or licensed provider. Trading markets or futures is risky and you can lose any or all of your investments. Always make sure you have a solid trading plan. Always manage your stop when placing a trade. See what's going through my head on any given day, and that is what I'm about to share with you as taking a look at some of the equities around the market. Let's jump right into Canadian Solar. Canadian Solar has had a nice push up here in price action back from beginning of February on a T3 moving average crossover, Heiken Ashi bar solid body with a re-entry point as it's a little bit far extended from the T3 entry point. Looking for the increased probability here. Back on February 11th, putting you in the trade, solid Heiken Ashi bar tail up to keep you in on a 100 tick range chart. Once price action set itself up for Fibonacci, an 85% probability that price action would continue to the upside, and there it did, right to 39.05, and then retracing. Price action now shifting a little bit here on Canadian Solar. As you can see here, solid Heiken Ashi bars, tails down with the T3 moving average crossover first here back on the 18th, one day ago, and it continued its downslide today as now 5 under 34 period moving average. Now, this is not the time that I would be chasing the trade. I would go to a slice to an intraday, possibly a 50 tick range chart, to follow the trend or wait for the pullback on the bigger trend, and then if it is to continue downside based on many other indicators that you might use to keep you in the trend. So again, Canadian Solar, a nice run up, but watching for a re-entry opportunity. If this is simply just a pullback, you will see the T3 change trend. As we can see here, it's all downside, 5 below 34, and the T3 moving averages to the downside, looking for the crossover opportunity back to the upside. If it is to continue downside, again, go to a smaller time frame. Simply take the bigger picture. Go and give yourself a 50 tick range chart, as we've already hit the Fibonacci target. There you go, splicing into an entry that gives you an opportunity. Again, you'd at least perhaps want to wait until you broke above 39.05 or at least the previous high, and price action be in trend. Take a look here at Skechers. Skechers in the news again, as it's just continuing to have some awesome price action after its earnings, continuing to push upside. Early entry back on Skechers was way back. Had several opportunities back here in the last earnings, back here in February, as price action continues to just relentlessly push upside here on a 100 tick range chart to keep you in trend. The color is green, 5 above 34, keeping you in trend with solid Heiken Ashi bar. Simple as that. All you're doing is looking for the entry. So if it's not a 100 tick range chart and you're following a daily chart, there you go. Squeeze it up a little bit, and nice opportunity on last entry call here. Back here on February 12th, price action pushes to the upside. Solid Heiken Ashi bar, tail up. You're in the green, 5 above 34. Keep you in the trend with numerous opportunities to maneuver and push your stop up with a trailing stop at each most recent swing size low. Heiken Ashi bar is right there. Move your stop up, move your stop up, and as price action continues upside, I would go to a smaller time frame and manage it on a slightly smaller scale. After the most recent earnings call, you can see back on April 21st, April 23rd, it's been nothing but upside. Another great resource for finding potential opportunities in the market include the IBD. Check out every day the IBD TV resource. They got some great ideas from Cheetah Mobile, Red Robin, and Ambarella. Let's take a look at some of those opportunities that exist on charts over here. Let's take a look at the Red Robin as IBD. Strong fundamentals on the Red Robin. Again, using the strong fundamentals, value-based, and applying to a technical setup. Sometimes simply taking that stock that you heard of and applying to this simple chart strategy might give you actually an earlier opportunity or an ability to stay in the trade a little bit longer. Here on a 100-tick range chart, you can see Red Robin all about the green here today as solid Heikin Ashi bars in the green to the upside. Again, if you weren't able to capture that on an intraday smaller time frame, you might want to wait for a pullback to continue in the trend. Here we see Urban Outfitters dropping off from its high as it's coming down here in the T3 moving average, 5 below the 34. Again, in a downtrend, if you're into this for the short in earnings call, again, popping that downside, wait for the pullback on a smaller time frame or look for the re-entry to the upside. If this is simply merely a pullback, again, you'll look for a T3 moving average crossover. Taking a look at Cheetah Mobile, a stock that I talked about last week in one of my daily trend wrap-ups. Here we see price action has been doing really well, holding to the upside and strong. T3 moving averages upside, 5 above 34. Solid Heikin Ashi bars to keep you in the trend. Doing really well. Ambarella, a stock that is a Go Pro chip supplier. Go Pro chip supplier doing absolutely phenomenal in the market. Here we can see on a daily chart, Ambarella AMBA has been posting after markets. It has, I believe, earnings coming out soon. You might want to wait for earnings or get the early entry on a intraday set up here back on the former earnings session. Price action popped to the upside, breaking above the 63.30 buy point on IBD. So getting an early catch on that is always an opportunity on a T3 moving average crossover. Getting into the intraday might mean getting onto a 100-tick range chart or maybe even a 50-tick range chart. As you can see, price action a little bit more volatile, but offering opportunity on a swing size as price action here, crossover, T3 moving average crossover buy point, and then once again splicing in again. Doing wonderfully well above that 63.30 as it comes up on the earnings. Other stocks, taking a look at the IBD today. Here's AVGO, Avago, forming a cup and base based on the technical setup of the fundamentals of IBD with a 136.38 buy point as price action continues to move upside there on a 100-tick range chart here. Again, a lot of chop action. You can go to a daily time frame, give you a little bit of a smoother entry perhaps. Let's go ahead to the time frame with the daily chart, and that actually, excuse me here, let me go ahead and set that to a daily. There we go. As price action breaking to the upside here on a T3 moving average crossover, solid Heikin Ashi bar as it moves closer to that 136.38 buy point and breaking upside to keep you in the trend. Again, I'll come back here to the range chart. As you can see, price action in the last almost week here has been breaking up to the upside and working its way towards that target up above, giving you, again, a slightly early edge to the entry. Altera here in conjunction with Intel talking about merger talks as price action you can see here on a 100-tick range chart also popping to the upside on solid Heikin Ashi bars and tails up. And our last two stocks to look at today, Qorvo and Skyworks, Apple chip makers, with 78.1 buy point and 102.87 buy point from the IBD as price action continues the upside. Again, what is it that I want to share with you here is that while you might use the IBD fundamentals for entry, another way to look at opportunity is to look for simply if you know that the buy point is coming up and price action is just strong with a 534 crossover using the T3 trending move strategy to keep you in the trade. It's all been green here to keep you in trend, remove the emotion, and manage your stop on the way up. You can simply either apply a Fibonacci extension from the lowest low to the highest high. You take the retrace and you can see price action always has an 85% probability of hitting fib target number 1, and as it continues to move to the upside, you simply manage your stop on the way up. So again, we take point A, point B, we take the retrace here, and we then have a fib target right here. So again, waiting for after the pullback for this to continue upside would be a solid Heikin Ashi bar and tail up in the green. Here we have Skyworks, another company, Apple chip makers. Again, if it's not working on a time frame, you can go ahead to a range chart. As we see price action here on Skyworks has pushed above the buy point of 102.87 here. Entry back here on May 7th on a crossover, solid Heikin Ashi bar tail up. Again, don't chase the trade. Wait for the pullback. You can go to from a 100 tick range chart. I would go down to a 50 tick range chart to be able to enter, splice it into a longer term trading. Again, if range charts doesn't work for you, you can always go to a daily chart. That concludes today's Spotlight Trend Trades of the day, and that's how I call it in the sandbox. Have yourself a Blue Zone day, one strategy, any market, any chart, any time frame.